Trade the pink line back towards the black line. The black line is the 2-year swaps rate. Okay, so the black line is the 2-year swaps done in bond price narrative. So it's the pink line relationship, which is just simply the bond price. So if we're trading at a premium, we want to try and trade that back towards the black line. So as we come into the first refunding announcement, can we all agree that the bond price is trading at a significant premium to the 2-year swaps market? Yes or no? We can take yields off the chart if it's confusing. Can we all agree that the bond price is trading at a significant premium to the 2-year swaps market? So on the basis that it's trading at a significant premium to the 2-year swaps, we would imagine that there's going to be a lot of bond selling coming in. And you can see what happened over the course of the next month. There was a lot of bond selling came into the bond on the day after the announcement, right? So on the day after the announcement, as we came into February, there was basically a huge amount of selling right through February. Huge amount of selling. So that's a monster winner trade for anybody that was on bonds. The sell trade, by the way, the next day, guys, was 145s. We got down to a low price of 132s. It was about $13,000 per contract on that sell-off. 13 grand a contract. As we moved into the next quarterly refunding, it's a little bit more awkward to try and figure this one out. But if we zoom into the macro again, it's always going to be a sell. But, you know, we want to try and get more into the monthly. This is a little bit harder. On the face of it, it looks like it should be an easy short. On the short term, it looks like an easy short. So again, we're thinking short selling bonds as we come into May. And that looks like the deal. It's a short bond as we come into May, because obviously these refunding will have a big impact on that month's auctions, won't they? So as we move into that month's auctions, people's demand and supply on those auctions, the desire to get that is going to be referencing that amount of supply that's coming up for that quarter, isn't it? So it's got to. So we obviously looking again at short selling it. And again, you can see that for the next month, again, the short sale coming into the bond went from 141s, a low print during the month of 133s for about $8,000 a contract. So another very, very, very good short sale on bonds. I didn't expect it to be as good as that month, but turned out to be actually quite good, considering the 2-year swaps stayed relatively punchy at the top edge. As we move into the next quarter, which should just be coming up there, this is even harder to figure out, isn't it? This looks like fair value now, doesn't it? You can see the bond price into the lows, the 2-year swaps into the lows. It's starting to look a little bit bullish. Just a little bit bullish. You can see, obviously, we still got a big short. And you might say, but why did we get a big short? Well, there is a macro to this. Hold 1 second. We zoom out from this chart, you'll see why the sale was still coming in, because when you zoom out, it should nearly always be short selling bonds. Take a look. You know, so when you zoom out, you're still getting that kind of macro view that we really need to get a heavy short on bonds before we can get that. The amount of money the government's spending is so large that we need to really keep short selling bonds, don't we? I mean, it's pretty simple. We know where the bottom of the bond is because we've now got the ability to draw that price across our screen. So what happens is after that short comes in, you're starting to see the bond reaching the kind of levels where the amount of supply is now priced into the market, and we can take advantage of that knowledge. So the short comes in and we get another big short. The 2-year swap still dropping hard, but take a look at what happened into this refunding on the short term. See the difference in the refunding in the short term here? There was this buy in bonds that seemed to be very visible from the refunding announcements. You see that? So when I'm looking at this here, and I started a few days ago telling you this is going to be a long bond trade, it looks like the long bond trade is coming in. It looks like perhaps the spending pivot is in, perhaps the Fed pivot is in. We told you this. We did a classroom on this. We tweeted it out on this, that it looks like the pivot's in because of this short-term narrative here. And obviously with that short-term narrative, I really quite like the buy on bonds. I think the spending pivot is in, and we're starting to see the opportunity back here to buy up some of these bonds. So coming into the refunding announcement today, I was keen to be long bonds. The next refunding, by the way, guys, 29th of January, just if you want to put it in your diaries, 29th of January, we start getting that data coming back out again. So you can put it in your diary for 3 months' time. And we'll look for that refunding announcement coming out. And we'll see how it plays out next week in a quarter's time. But this looks like a buy trade. And based on this buy trade, we'd imagine that this month, we should be long bonds. Now, that should be good for what? If we're going to be long bonds, what should that be good for? If we're going to be long bonds during December, during the next quarter, we should be good for equities, shouldn't we? We should be good to buy like the NASDAQ equity narratives. We should be looking at a bullish marketplace, a bullish equity space. And that's obviously something that we can start watching for. We're kind of seeing it, aren't we? We're actually starting to see it. So I like what happened in here, guys. I like what happened in here, yeah. I like the overall shape of this. I like how it's evolved. I like the story that we painted for you. Hopefully you like the story too, and you've been able to understand the storyline, because we did cover it in classroom. Okay, we got a big change in the we got a big change